the absolute level of restructured assets and NPAs together is at a high level, around 10%. 10% is our estimate. And, that's not a comfortable level. Now, 10% doesn't mean these are total loss. A fraction of the restructured assets turn into NPAs, and a fraction of the NPAs are total write-off. So in that sense, shouldn't immediately say this is a total loss. Nevertheless, the point is that if you continue rolling over in situations where the project is unviable, or where the project would benefit from new blood, fresh blood, or the project would benefit from additional capital which would allow completion, all those things can actually make something which would go into a total loss actually viable and produce value. So my sort of worry is twofold, that if we sit on these NPAs, sit on these restructured assets without closer monitoring, closer action, we will see a further erosion in value. And that we need to combat. So we need to figure out what we need to do to realize the real actions, or to make the real actions happen, real side actions, that will put these projects back on a firm footing where necessary, or liquidate where necessary. Second, this I think is a related issue, which is that public confidence in banks and public perception about the legitimacy of things like recapitalizing banks has a lot to do with whether you think that the money has gone in the right direction. If what happens is we bail out promoters who have siphoned out the money, or who have put too little equity but retain full equity holding, so that when the project comes back on stream, they get all the upside, and the downside is borne by the public banks that did the restructuring. And remember, a lot of the NPAs are with the public sector.